I know that my mic is off. I'm just waiting for more people to join. And then, in how many minutes? Half past calculated, or 25 past. We'll start at 25 past 3, yeah. 25 past 3. Let's just wait 2 more minutes for the others to join. Hmm? Okay, I think the others have joined as well, except for one person who said he couldn't make it. So let's start the session. So I understand that most of you are beginners. So since most of you are beginners, I'm gonna start you off with the basic structures, and then we're gonna see from there. Okay, we have uh we have a bullish uptrend. Why no? We have a bullish uptrend, and then we mark it as a to show that there's continuation in the structure. I know that most of you all are aware of this, but I'm just doing it just in case before I get on to the next structures. And then we mark it like that, okay. And then let's move on to the next structure. I'm just gonna do this as fast as I can because I don't so like I don't think there's a need to take that long. So it's pretty much just the same in a downtrend, just other break of structures, continuation to the downside. And then mark our break of structures, mark our break of structures. And then this is pretty much everything you need to know about break of structures. And then there are reversal patterns like this. And then in other words, this was a bullish movement until it broke structure to the downside. Okay. And then here's our structure. We call it market structure shift, MSS for short. And then it continues to the other direction and stuff. Okay, continues downwards. And then it works the same way with a bearish trend that changes structure to the upside. For example, here's our bearish trend. Okay, we're going down, and then it switches structure, and then it changes to the upside. Okay, our break of structure to indicate we're still going on the downside. And then here, structure shifts to the upside. And then, column one. Oh, okay, we shift to the upside. And then it continues to the upside. So that's pretty much everything you need to know for now, but I have a new structure to introduce to you. Okay, let's say we have a structure going to the downside. Okay, and then it continues and somehow it changes character, market structure shift, as you may know, and then it goes to break this low. Like what happens then? And then from there, my theory at first was it's two change of characters, but that wasn't the case at all. That wasn't the case. Okay, it changes structure right here. Let's change our structure. This is similar to our entry on Friday, the entry that we caught yesterday. This is a similar structure to that entry. So, my theory at first was that this was another change of character. Normally, everyone would say that, but it is wrong, even though it looks like it looks perfect in other words. Market structure doesn't follow another market structure. Break of structure follows market structure shift, and then market structure shift is then followed again by what? Break of structure again, over and over and over and over. But we can have like, let's say we have something like this. Let's say it goes up and then, okay, let's just leave it there. Okay, let's say it goes up like that. Like, just imagine right now you'll be having three market structure shifts instead of only having one. And this can get so confusing for a lot of people. This can be so confusing. So I came to a conclusion that something needed to change with the structure. Otherwise, I'm gonna have a lot of losses. Especially, let's say my entry was somewhere around here, right? After this structure shift and then markets come down, let's say my entry was here. This would be a loss. And then I change it again to the, let's say it changes structure again, and then my other entry will also be here, and then I lose. That's two losses in a row. Just imagine. That's two losses in a row. And nobody likes losing. Let's be honest. So in that case, we have to change only one thing. We have to introduce inducement in this equation. Okay? We introduce our inducement. And many of you might not know what inducement is. It's liquidity near an order block, meaning that somewhere around here, if we have a structure coming from the side, where's that thing? Where's that thing? And we have this now. Okay. Oh, let's say we have a structure coming from the upside like that. We had something like this in the past. Let's say, yeah, we had something like this. Let's say we had something like this, and this will be our break of structures. 81 minutes or 30 minutes. And then let's say this will be our break of structures. Break of structure normally since it's continuing to the upside. And then another continuation and so on. So when you come across a structure like this clearly means that there is an order block nearby. So the term inducement and indicates that there's an order block nearby. But sometimes you might struggle to find the order block. So in my case, I just enter after inducement has been taken. After, in other words, the liquidity has been swept. Since inducement is liquidity near what? An order block. So there are two ways to enter a trade like this. We already know where the direction is going, right? We have our market structure shift, and then it takes out our liquidity, which is our inducement. After taking out our inducement, we can enter right away, targeting this as our next what? Break of structure. This automatically becomes a break of structure. This will be our target, and then entry right after inducement has been taken out. Or you can find the order block, and then your entry will look something of this sort. And then you target this high that created what? The inducement, or that took out the inducement. So this is how our entry on Friday was looking. So let me show you what happened. Let me show you what happened, what we did. Okay. Okay. Let me show you how I got the entry. Because I'm sure a lot of you were curious about that entry. Like it was unreal, honestly. So let me just clear this up. Let's clear this up. And then I used the 1 hour time frame to analyze my chart. Let me just type 60. I used the 1 hour time frame, and I only trade during London session, which is between 9 and 2 o'clock, like 9 in the morning. So when I woke up, I saw something of this sort. The market was going up, but we didn't have a decent change of character, honestly. So let's just say this is our break of structure. This is our break of structure, and then the market had to come here in order to create a change of character if it was going to the downside. But since it didn't, clearly means that we are safe normally at the time. Let me just put it here. Almost one option textile and application. Normally, if the market needed to give us an entry to the downside, it would have came here and then gave us something of this sort normally. But since I wasn't aware of this yet, it hadn't happened yet at the time. All I had to do was analyze what I see at the moment, not what I think. Analyze what I see. So here we had our first market structure to the downside, and this was the high that caused the market structure to the downside. This was the market structure that caused the downside. And then we had something of this sort. And as I said, it means that this is an inducement, in other words, meaning that there is another block near here somewhere. So in terms of time frame alignment, we have to align time frames in pairs. For example, 4 hour with 1 hour. And then since we're analyzing on the 1 hour, we have to align it with the 15-minute time frame. So let's go to our 15-minute time frame. Let's go to our 15-minute time frame. Okay, this is how it looks from the 15-minute time frame. This is how it looks. And then, okay, we have our endorsement, and then we have our market structure shift. Okay, let's mark that up. And then, as I said, endorsement indicates that there's an order block nearby. And where there's an order block, there must always be what? A fair value gap. So normally, what I saw was that the only fair value gap that we have at the moment was this one. We had this fair value gap right here, even though like it's barely visible at the moment, but this is our fair value gap. In other terms, it's our imbalance. Okay, let's mark our imbalance. This is our imbalance or fair value gap. You can choose how you call it. And then let's mark our order block. Let's mark our order block. This is our order block, and normally it has to come halfway for it to be tested, meaning our entry would look something of this sort. We'll enter right here after the endorsement has been swept. After the endorsement has been swept. And then we go to the low that was created before the endorsement was taken out. And this is that load that was created before the endorsement was taken out. Okay, meaning this is our TP normally. This is our TP. Let me remove this indicator so that the chart can be clear. Okay, so this is how I got the entry. But as I said, if you can't find the order block, there are other ways to catch this entry. Okay, let's forget about our fair value gap or imbalance at the moment. And then you wait for the candlestick that caused or swept the endorsement. You wait for the candlestick to close, and then after the candlestick closes, you enter on the next one. Therefore, in my case, my stop loss is always 5 pips normally. So you'll enter right there, and then in this case, it didn't even go far, so there's no need for a 5 pip stop loss. So normally you just enter after endorsement is swept, which is our liquidity. Endorsement is liquidity near an order block. I repeat. So you just enter on the next candlestick and then you still target the low that caused it. So pretty much this was everything that had happened. So currently on the 4-hour time frame, I'm looking for something of this sort. Gold still seems like it's bullish on the 4-hour time frame. We're very bullish on the 1-hour time frame. So let me just get rid of this first. And then, okay. At the moment, like last week, or should I say the previous week, gold was just breaking structure over and over and over and over again. It was just continuously going up. And then, and then we have our break of structure still going to the upside, like I said. And then this is our other break of structure. Okay. And then we mark that break of structure. And then, as I said, due to the law of time frame alignment, since I'm analyzing on the 4-hour time frame, I have to catch my entry where on the 1-hour time frame. So we go to the 1-hour time frame, and then let's see what the 1-hour time frame has for us. And then this is where I introduce the concept of discount and premium. This is where I introduce discount and premium. Because normally there are a lot of value gaps in the setup. So like you can't just pick one out of the blue or randomly just pick one. Like you have to use the law of discount and premium. So, okay, and that text. This is our premium zone, which clearly means anything above the 0.5, which is our equilibrium at the moment. So anything above the 0.5 is premium. And then anything below half of our Fibonacci, which is the 0.5, is discount. And then therefore we do what? We buy at discount. We always buy at discount, and then we always sell on premium. Let me just indicate it real quick. We always sell at premium. So this is pretty much everything you need to know about the concept of discount and premium. And this is how you can use your Fibonacci retracement level tool, and then just now we know that we buy at discount and then we sell at premium. But you don't just buy randomly or sell randomly. You have to know first where like the trend is going. And in our case, it seems like we're still bullish at the moment, meaning what? We focus on discount. We forget about our premium right now, and then we focus on Fikile, all of us. And then, as I was saying, we focus on discount since we are in an upward movement, which is an uptrend. So let's mark out our order block and our fair value gap. This is our fair value gap normally. Let me do this way instead so that you guys can understand it more easily. This is our fair value gap, which is below what? It is below 0.5, meaning that it's a valid fair value gap since it's in the discount zone. Okay, let me just remove this out of the way. And then the candlestick near the fair value gap, or in this case, since we're in an uptrend movement, the candlestick below the fair value gap is our order block. So it's either you mark it like this or just do this instead. But I don't like my chat getting dirty and all, but why not? This way it's easier to understand anyway. So this will be our order block normally. And then and there's this thing that people confuse order blocks for, like Most people would say this tokenistic our order block, but me I just focus on what this one candlestick. The candlestick near what and a fair value gap is our order block. So with that being said, we enter our entry right here normally at our order block, and then we target our high, which is our higher high at the moment. And then stop loss, we can just use this candlestick, but me normally I like to put it all the way. So this is pretty much what I'm expecting from next week. That's pretty much what I'm expecting. This is pretty much what I'm expecting. So I'm seeing two texts here. Let me see. Oh, never mind. So this is pretty much what I'm expecting at the moment for gold anyway. I don't know for the other things, but I think we still have some time to go over one more thing. So I'm just gonna pick randomly. I can just pick which one is my favorite between these ones. Euro USD. I don't like currency, by the way. I just like practicing my strategy on them. Like I just don't like currency. So let's say we're analyzing on the 4-hour time frame, since we still have some time, let's say we have this low, we have this high, but this low was broken. Therefore, in my case, I will recommend that this is our break of structure normally. I will recommend it. And then clearly, I think this is clear more than anything. Like honestly, you can even see it or a block from the 4-hour, but that's not how we apply the strategy, right? So we're gonna do it this way instead. We have our break of structure, okay? So as I said, due to time frame alignment, you have to go to the 1-hour time frame to find the order block. Honestly, this is way too long. This is way too long. This is way too long. But we have to do, as I said, we sell where? We sell at premium and then we buy at discount. And right now, the market is looking bearish. So therefore, we are going to the downside. We are going to the downside normally. But we haven't checked everything. I'm just saying for this part right there. I'm only focusing on this part. If we check more on the history, we might find that maybe this is just what an inducement, and actually the market is going up or something. So like I didn't check everything because like we have to do this as quick as possible because I'm tired at the moment. So I'm just gonna show you how normally a normal person would catch this entry. And then you go down here and then you target that. Normally this is how I would catch the entry, but at the moment I have no clue where it's going because this might actually be an inducement for all I know. So I think we're gonna cut our meeting short and then I'll see you guys next time. And don't forget to ask questions in the group. I need you guys
How's
to
it,
ask,
man?
otherwise you're not going to learn anything. So this is it for now, and then I'll catch you guys later then.